Hello and welcome to another update video about Bitcoin. Today is Fed Day. Yeah, we get our interest rate decision today. So we can expect some volatility later on today. I think until then, probably not too much going on. At least that's what would typically happen in 90% of cases when we have interest rate decisions. You know, until the moment when the statement is released, you don't normally see much volatility. So we're probably gonna carry on in this triangle for a little while. It's a pretty full triangle. Explained that yesterday. It was the correct decision to count it as a triangle because it's now full. Yeah, regardless of if it eventually will break to the upside or downside. So far it is guided as well. I think this Elliott Wave count for an Elliott Wave triangle. And now this is currently where the decision is going to be made. So again, I'm only going to focus really on the shorter time frame here. For the pure reason because not much is going on the higher time frame. No changes, nothing. We have been tracking this triangle now for basically a week and nothing has changed on the higher time frame. So in this video, I would like to give you an idea of what the micro level count of this E wave is. Just be aware that these micro level or micro degree wave counts are very fragile. They can change a lot. And their predictive quality is small. But given the context of everything, we want to know when this move could be finished and what does need to happen on the micro scale to basically give us a hint, are we going to break out to the upside or the downside? But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so let's zoom in a little bit further. You can see this Elliott Wave triangle. The idea is still that we're in a wave 2 correction. So maybe I'll zoom out for a sec. That we are in this wave 2 correction. That's an ABC structure. And there are 2 possibilities here really mainly that I follow. The first one is that this triangle unfolds well, or that the B wave unfolds really as a triangle, A, B, C, D, E, and it would then follow to the downside. That view is preferred and remains to be preferred as long as we stay below $30,050 US. Okay, because above $30,050 we have a breakout point to the upside and the triangle gets officially invalidated. Why is that the case? That's quite simple, because in any Elliott Wave triangle, the expectation would be for price to break out to the opposite side of the E wave. That would be clearly down. Yeah. So if we have an A, B, C structure and the triangle unfolds, or the B wave unfolds as a triangle, you would expect the C wave to start at some point. The C wave would go to the downside in this case, and it would break or unfold after the E wave is finished. Of course, it could be that it's not a triangle which is unfolding and the assumption here is wrong, but so far it's worked perfectly. If the assumption is wrong, then it would only be the assumption here on the lower time frame. Really, the larger degree here is unaffected, because really the idea is that the B wave unfolds as a triangle, or, and that's just the other perspective on the lower time frame or on the lower degree, that it unfolds as a WXY pattern, which would lead to a higher B wave. They are both possible, but they are both part of the same scenario that we are in a wave 2. It's just a matter of, are we going to take the the scenic route, yeah, or are we going to take the direct route? Okay, so the triangle would normally be rather shallow, whereas the high B wave, well, as the name suggests, would be quite a strong retracement, you could say, yeah, a strong B wave that might even overshoot the previous wave 1 high, which is at 31k. However, I have to say, if we really break above the 30,050 level and it would invalidate our triangle, then we will have resistance, key resistance in my opinion, at 31k, because this is the wave 1 high. A break above that, in my opinion, would already suggest a breakout in a third wave rally, yeah, instead of a high B wave. But the high B wave is officially still high probability as long as we stay below 32,570. And the reason for that is this is standard Fibonacci resistance for a high B wave. So it goes all the way up to the 1.38 Fib retracement of the A wave. That's 32,570. Someone asked me in yesterday's video in the comments, you know, is there not really a possibility for a direct breakout to the upside? Now, let me tell you, everything I tell you in these videos is not what could happen, but what should happen. So if I give you two scenarios, they are highly likely. Yeah. If we have a scenario for a triangle and a high B wave, they are both highly likely. Of course, the market could crash to zero. The market could go to 100k from here. How likely is it? Not very likely. Could we get a breakout above 33k? Yes, and we could get one in a third wave rally. It's actually not too unlikely, but it's not one of my primary wave counts. Please note and understand that the market could do everything. As a trader and analyst, we need to be prepared for everything at any time. That's part of our trading plan and tactics. But trading is different, of course, from analysis. So, I mean, this is really about what should happen, what the market should do. But don't be surprised if the market does something that it shouldn't have done, because that can always happen. Okay, and that's why we do risk management. If that wasn't the case, yeah, if we knew always what's going to happen, we wouldn't need to apply risk management. The problem is many people don't apply risk management at all, don't know where it is, what it is, who it is, whatever, and therefore they lose out, okay, because they lose too much in a single trade. Whereas what they should be doing is risking little in many trades, yeah, not risking a lot in a single trade. Just don't do that. And many people do it, so they lose out, okay, and blow up their portfolios. No, of course, everything could happen. Please, let that sink into your mindset. Anything can happen, but the analysis is always about what should happen. I also don't trade what could happen. I only trade what should happen. Because literally, I mean, again, there's an infinite amount of possibilities how this could unfold. Yeah. Because I mean, I don't know all the market makers in the game, right? I don't know all the traders here in the game. So in every single move of the market, there's a different number. There are different traders. There are different variables. It's impossible to know them all. That's why we need to embrace the uncertainty mindset. It's very simple. Anything can happen, but be aware of the key invalidation points, the key pivot points, and just trade them. If the price breaks, for example, above resistance, it's pretty clear that we have to change our perspective. We do that just simply, we just do it. Okay, there are no hard feelings, we just do it. We're not biased here. It's always about analyzing and trading what you see. Like, I've been focused on this triangle because that is what I see. Yeah, I had a lot of comments about, okay, it could be this, it could be that, and yeah, it could be a lot, but the thing is, it's been adhering now to this triangle count for basically a week. It's been following it. Any other count might have worked out as well, but the thing is, I see a triangle at the moment, and it is unfolding as a triangle. The second option is that we get a high B wave. So yeah, just embrace that uncertainty mindset. Yes, bear in mind, of course, a direct breakout to the upside is possible because we are in a larger uptrend. Yeah, so it is the structure suggests we make that move down before we go up, but of course, because we are in an uptrend, sometimes the market makes shallow pullbacks, yeah, and it just rallies directly. But there's no point in an analysis to give you 100 different views, it doesn't make any sense. So we only focus here on what should happen, not on what could happen. And the objective view needs to be that based on the rules and guidelines of the Elliott Wave method and what the market is doing right now, ideally we get that deeper wave too. But of course, you know, we get instances where the market is simply doing acting in a way as it normally shouldn't be acting. Okay, so it's always it is always worth to have risk management in place and to always ask yourself, you know, what would happen if the market rallies now? Do I have my core position? Am I positioned, you know, or would I be left chasing? You know, that's sort of what is part of trading there, not really part of the analysis. See them as different. One more thing to mention, I wanted to show you how this lower degree wave count of the E wave could be unfolding, because at the moment the idea would still be, okay, we have an A, B, C, D, E. This could very easily break to the downside now because we have a full pattern. It doesn't need to go any higher. It's done what it needs to do. Yes, ideal target I think was a little higher here for the E wave. What would that be? Yeah, the ideal, first of all, we reached the very first target for an E wave, which is the 38.2 extension. The ideal target would be the 61.8 extension here around 29,380, plus minus a few dollars, depending on what exchange you look at. But they are only really guidelines as well. The key is here at the moment of this Monday low, we have a 3-wave move to the upside. That is quite promising because, or at least this would suggest, okay, we have 3 waves up. Okay, so an E wave could be complete because an E wave is a 3-wave move. If you look at this, it looks like as if we have 5 waves down. 1, 2, 3, 4, 5, and now 3 waves up on the micro level. It could break down any moment. So looking at the micro level, now I'm not telling you it will, but I think if we break below this swing low at 28,360, there's a good chance we break the triangle to the downside. My opinion is this here could be a W, X, Y 3-wave move, and then go to the 30-minute chart. Again, I promised you we do a bit of micro counting. Don't see this as super reliable, but and then we've got here, in my opinion, a 1, 2, 3, 4, 5 in wave Y. No, sorry, in 1 second. W, X, Y. 1 second. Something. No, I think I'm missing one. W. Oh no, not the W, X, Y. It would be probably rather an ABC. Yeah. And someone also asked me in a previous video, you know, when you have these long C waves like here, you know, A, B, C, yeah, this C wave looks overextended. Yes, it is, but you get this a lot on lower time frame counts. Okay, 1, 2, 3, 4, 5, and C then. That works out, and then we have an ABC to the upside, so it counts as a nice 3-wave move up. Now we have a possible 5-wave move down. It's certainly time to be watching here. So this could be a small 1, 2 setup to the downside. We're now in resistance for wave 2. And if we take out the previous swing low, this could come down and break the triangle. Bit speculative at the moment, but what I'm telling you at the moment, be watching. If we take out, of course, this E wave high at basically 28.9K, it's gonna break to, well, at least the E wave here isn't complete yet. Yeah, and we actually will have a 5-wave move to the upside, which would then rather shift probabilities towards a break to the upside. But it doesn't really give you a lot of edge down here. This is really the micro count of this triangle, but I try to just guide you where we are, give you an understanding. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.